So more and more and more, they want us to live all of our life and hold all of our wealth on a system that is vulnerable to cyber attacks. World War III has already begun, but in cyberspace where you can't see it. What do you think? You think that might mean that when this hits, you won't have any warning? So that's why it's important to get prepared today.
If you want to stay ahead of the curve and protect yourself in this rapidly evolving landscape, keep watching. Lynette Zhang's perspective is not just informative, it's a wake-up call for all of us. In today's video, Lynette Zhang raises critical concerns about the risks AI poses when it falls into the wrong hands. Why is this important? Because as we move more of our lives and wealth online, understanding these risks is crucial. Lynette warns that World War III might already be happening in cyberspace, unseen and without warning. Her insights urge us to prepare and consider safer alternatives, like sound money, that aren't susceptible to these digital threats. So don't go anywhere, and let's start the video now.
We're going to first start by talking about AI because that is all the discussion now, isn't it? And according to the Singaporean central bank, AI risks of financial stability are already a central bank worry. Really interesting. For me, the main risk is AI in the wrong hands. And apart from scams and fraud, I would add cyber attacks as a key area of concern. Well, there are a few key areas of concern because, first of all, the wrong hands could be relative, especially when we're talking about a lever to control the population. But let's just move on and see what else he has to say. AI has the potential to turbocharge these capabilities for cyber attacks. So more and more and more, they want us to live all of our life and hold all of our wealth on a system that is vulnerable to cyber attacks. You know what's not vulnerable to cyber attacks? Sound money is not vulnerable to cyber attacks. Let's go back and see, because the big question is, the cyber attacks are hidden, and many people think that World War III has already begun, but in cyberspace where you can't see it. What do you think? You think that might mean that when this hits, you won't have any warning? So that's why it's important to get prepared today. But that's only one of the risks. Rising cyber threats pose serious concerns for financial stability. Greater digitization and heightened geopolitical tensions imply that the risk of a cyber attack with systemic consequences has risen. And will they use that as an excuse to take more and more control away from you? That is one of the concerns that I absolutely have. This is according to the International Monetary Fund, so that's every central bank chair and every treasury secretary, and they're showing the rise in cyber incidences. Now, I don't really care so much about the losses unless it happens to you and me. And that's why it's critically important to be diversified. And whatever wealth you're going to hold inside the system that is vulnerable to these cyber attacks, make sure that you have actually this kind of gold on the outside of the system to balance that out. That makes a whole lot of sense. You want to be appropriately diversified. This is a key diversification tool. We can see it with what the central banks are doing as well. Cyber attacks have more than doubled since the pandemic. When was the pandemic? Oh my gosh, 4 years ago. In 4 years, cyber attacks have more than doubled. Do you think that's going to slow down, or do you think that it might speed up? Because here's another vulnerability. Lovely Janet Yellen, who says she's not going to see another financial crisis in her lifetime. Non-bank mortgage companies pose financial stability risks. So going back to 2008, when it was the banking segment that were issuing all of these loans to people with lower than stellar FICO scores and all of the variable rates, et cetera, the banks were vulnerable. So they pulled back from that area, and who moved in? Our non-bank mortgage companies. And the problem with that is less oversight. We saw the big problem when there was a level of oversight in the banking system. So what does that mean? Because first, it was commercial real estate loans. Now we're talking about mortgages. Put simply, the vulnerabilities of non-bank mortgage companies can amplify shocks in the mortgage market and undermine financial stability because real estate is roughly a third of GDP. That's all the money that floats through an entire company or country or the world, quite frankly. Non-mortgage companies' vulnerabilities tend to fall into concerns about liquidity, leverage, operational risk, and interconnections. What does that mean? Liquidity is the ability to buy and sell without having a huge impact on the price. So all of these things that have been packaged up into these pretty packages and sold to your pension plans, sold to your retirement plans, they're in mutual funds, they're in ETFs, they're all over the place. And the vulnerabilities, liquidity, their ability to sell, you can buy and sell bond funds, ETFs anytime you want. But can you sell a mortgage anytime you want? No, that is a lot less liquid. That is liquidity mismatch. Doing something short term when the underlying asset to it is long term. That creates a lot of vulnerabilities. Leverage. Leverage is debt upon debt upon debt upon debt upon debt. These are all hidden risks that you and I can't see, and they don't really talk about it too much. But if you go into the prospectus, that's where they can talk about it. In some cases with these derivatives, they're 1,000 times leverage. So it depends. I'd be checking. If you own any of that stuff, I'd be checking the prospectus to see how leveraged they were, because that means that there's minimal equity, but lots and lots of debt. So when the markets drop, when they implode, you can't sell it. If you do sell it, it's at a huge loss. Do you kind of remember what we talked about? Oh, well, there's my chopstick. Interest rates, market value. Any debt instrument, including mortgages, as the interest rates have gone up, all of those mortgages that were issued at lower interest rates have lost a lot of market value. This is key that you understand that, because this is stock performance continued to rebound from the bank stress in March 2023, when those regional banks went out. But hey, everything is fine, don't you think? No, it is not fine. Do not be lulled into a false sense of security. Central bankers and governments use the stock market because they know that's what most people look at. So you open up your 401k statement, and as long as it hasn't dropped a lot, you go, oh, everything must be okay. Well, again, I'm going to tell you, in some cases, you cannot take a distribution from your retirement plan, but you better be diversified, because what are you going to do? I always like to ask myself, what if I'm right and what if I'm wrong? And if there is an option where it does not matter whether I'm right or I'm wrong, that's the option that I'm going to take 100% of the time. That's what gold does for you. It gives you that option. And, there are some things, because of course there's gold, and we can save that for another day. I'll be talking about that pretty soon. And we've spoken about this quite a bit as well. Ray Dalio warns the U.S. is on the brink. And what he's talking, and estimates a more than 1 in 3 chance of civil war. 1 in 3. Let's make this a peaceful movement by simply putting your fiat money into sound money, physical gold, physical silver in your possession. Because quite honestly, regardless of your perception, if you don't hold it, you don't own it. It does not matter what you think. Billionaire investor Ray Dalio is holding on to gold as a hedge against the potential risks of rising inflation and a looming debt crisis, and he's preparing for civil war. How do you prepare for civil war?
Remember, the potential misuse of AI and the increasing threat of cyber attacks are not just theoretical. They're very real challenges we need to be aware of. Lynette's perspective highlights the importance of safeguarding our wealth and staying informed about these emerging threats. If you found this video helpful, don't forget to give it a thumbs up and share it with others who need to hear this message. Also, hit that subscribe button and click the notification bell so you never miss out on our latest videos. Do you think AI and cyber attacks are the biggest threats to our financial stability? Leave a comment below and join the conversation.